All right, everybody. Thank you for joining us tonight on the 722 YouTube Live. We just got off on an awesome Twitter space talking about master mindset. And tonight is day 2 of Dr. Chris Cole teaching on trading fundamentals. And this is some of the types of teachings that you guys will get with being an NFT holder. Go ahead and get your journals out and get ready to learn something new tonight. All right, we're going to give it over to Dr. Chris Cole now.
All right, class number 2, trading fundamentals. It's class number 2 of our foundational trading course. Okay, my foundational trading course. It doesn't matter if you trade in options, if you trade in futures, forex, crypto. This is the foundations and the fundamentals of all markets. So tonight we're going to talk about the truth about markets, okay, and how markets really work. I like to make things as simple as possible. So make sure you got your notebook, follow along, jot down things that you don't understand, and you can always come back on YouTube and review the video, review the lesson at any given time, okay? Make sure you're already following us at 722.io, tap in, get your NFT, take part of the project early, as this is going to grant you exclusive access over 300 hours of trading, education, and content that I previously recorded, along with unlimited future lifetime access to my live trading rooms, newsletters, Discord, and the community. All right, tonight, trading fundamentals, how the markets really work. Trading is one of the most manipulated games in the world, and at the same time can be one of the most rewarding. The handlers, the banks, and the institutions of the markets are notorious for ensuring that most participants consistently lose money while they continue to make money. We've all heard that 95% of retail traders lose money. Well, what you are here to do is to uncover the secrets of how the 1% consistently make money in the market time and time again. First, you must learn to think like the banks. I know you're coming across this YouTube video and the sound of my voice, you're probably familiar with trading. Some of you may have just started out. Let me tell you, the less you know, the better you know, the better it is for you, okay? You're gonna have to unlearn and relearn, right? How the markets really work, how the markets really function, okay? The banks have the power to move the financial markets at any given time as high or as low as they wish. Their goal is to make the most amount of money as possible. The only way this can be done is by taking the money of majority market participants, okay? I'm gonna read that again. The banks have the power to move the financial markets at any given time as high or as low as they wish. Their goal is to make the most amount of money as possible. The only way this can be done is by taking the money of majority market participants. Now, how do they do this? The simple answer is they can identify where money can easily be taken. Trading education is a multi-billion-dollar a year industry, and 99% of them teach the same few tactics. You are literally getting trained to lose money. You must learn to become the hunter and not the hunted, okay? I'm gonna read the second paragraph again. How do they do it? The simple answer is they can identify where money can easily be taken. Trading education is a multi-billion-dollar a year industry, and 99% of them teach the same few tactics. You are literally getting trained to lose money, okay? As you know, most teachers, most educators don't even trade, right? Or they do what? Trade in simulated accounts. You're literally getting trained on how to do what? Become a consistent loser. If we go back to lesson 1, first thing on the Trader's Creed is what? I am a consistent winner. If I am a consistent winner, guess what? I cannot do what? Train or be educated on those who what? Are training me to do what? Consistently lose money in the market. Okay. This is a game of killed or be killed. Learn to become the hunter and not the hunted in the market. Okay. You're learning how to become the hunter and not the hunted in the market. Now, what do I mean by that? Okay. If 95% of people lose money when it comes to retail trading, right? And everybody is doing what? Trading patterns, trading candlestick patterns, trading Fibonacci's, using indicators, you know, all of these tactics that you can literally just go on YouTube and you can start trading or watch a video and figure out how to execute a entry point into the market. Okay. Guess what? This information that the retail traders are getting trained on is common knowledge. Okay. So if the banks or the institutions are aware of what the retail traders are being trained on, it makes it what? That much easier for them to be able to identify when and where the retail traders are in the market, okay? And do what? Figure out how they can go take their money, okay? How they can go take their money. The 3 states of the market, okay? One lie that retail traders are told is told through charts. Charts have a quietly deceptive appearance that leads one to think that the market has a left to right element to it. The market can only move in 2 directions, up or down. And what? It is also always in one of 3 states. Okay, I'm going to repeat that again. The market can only move in 2 directions. The market is either moving up or the market is moving down, right? And one thing we do know is that the market is always moving up and down. This is what we call what? The bid and the ask price, okay? Now, the 3 states, write these down. The market is either hunting liquidity to the top side of the market, is hunting liquidity to the downside of the market, or it is consolidating. Now, what do I mean when I talk about liquidity? Well, I just talked about we have to do what? Start to think like the banks, okay? So in your notebook, I want you to jot down liquidity equals retail money, okay? Liquidity equals retail money. If I can identify where the retail money is resting, then what? I can go target it, okay? If I was on a treasure hunt and I had a map of where the gold was buried, I can now do what? Set out a plan and what? Go target the gold. The banks think and execute in the exact same way. Okay. The banks think and execute in the exact same way. The banks can identify where the retail traders are. Okay. And what we're going to learn over the course of these this trading series is this one simple key or this thought. Okay. I want to be able to identify at all times where the retail trader is currently making money. Okay. Major key. I want to be able to identify at all times where the retail trader is currently making money. Okay. If I can identify where the retail is currently making money, if I'm a bank or if I'm an institution or I'm a big trader, or if I'm trading with the mindset of the banks, I now can do what? Go and target the retail trader. Okay. I can now go target the retail trader's money. Okay. So the first thing that I do every morning when I come up to the market or when I'm marking my levels or before I execute a trade, I want to be able to identify where the retail traders are currently making money. Okay. Because if I can identify where they're currently making money, I can now set my sights on doing what? Coming to take their money. Okay. I can set my sights on doing what? Coming to take their money, coming to target their money. The market is always moving in one of three states. It's either hunting liquidity to the upside, hunting liquidity to the downside, or it's consolidating. And what do I mean by consolidating? What I mean by consolidating is that the market is doing what we call ranging, or moving in between set prices high and low. Okay. So if let's just say on a scale of 1 to 20, consolidation would be the market moving between 10 and 15, the numbers 10 and 15 for an extended period of time, okay, or a predefined period of time. Okay, if it's not consolidating, it's either doing what? Moving price higher to take retail money, or it's doing what? Moving lower to take retail money. Trading is a game of probabilities. And within this game, there is only 3 things you can control. 100% of your time should be focused on these 3 things and these 3 things only. Okay. When we start talking about becoming a consistently profitable trader, right? Or if we want to talk about becoming better at something, the only way we can become better at something is by doing what? Working on the things that we have control over. Okay. The only way we can become better at something is working on the things that we have control over. Well, guess what? In the game of trading, in this game of probabilities, there are only 3 things that we have control over. Okay. There's nothing else for me to work on. When I'm doing market replay, when I'm going back and I'm studying my notes and looking at my journal, right? The only 3 things that I'm focusing on are where I enter the market, where I exit the market, and how much I risk. Okay. Everything else carries 0 importance. Okay. If I want to become a better trader, if you're going to become a better trader, all of your time has to be focused on these 3 things, the 3 things that you can control: where you enter the market, where you exit the market, and how much you risk. That's it. And guess what? The least important of these 3 is where you enter. Remember, no matter how good your analysis, how much research you've done on fundamentals, you can still and will be incorrect at times. Okay. If you go look at all of these, these other retail trading programs or these trading education programs, 99.9% of them only teach you how to enter a market. Right? When I meet traders for the first time, they always talk about, what's your strategy, right? And what they're really asking me is, where do I enter the market that's going to make me right most of the time? Okay. Your entry is the least important part of trading. Okay. Your entry is the least important part of trading, right? But again, in these core fundamentals, this series of teaching that I'm going to do, I'm going to show you how to pinpoint your entry, right? How to pinpoint your exit, right? And most importantly, how we are going to do what? Manage risk. Okay. And when you're not trading, when you're not in a trade room trading with me live, when you're not on class listening to me teach, okay, your time should only be spent on fine-tuning your entry in the market, right? Fine-tuning your exits, right? And most importantly, fine-tuning your risk management in the market. How much you risk is the most important aspect of trading. If you do not master risk management, you will consistently lose money, no matter how good of analysis or a copycat you are, okay? I can literally give you all of my trades, all of my plays, right? And I do on Twitter, right? I do inside of our 722 Discord, right? Well, how is it if I give you the exact same plays, strategies, or executions that I'm using to make 7 figures plus, the next person does what? Blows an account. Okay. Your risk is the most important aspect of trading. I want you all to write that down in big bold letters right now. Risk is the most important aspect of trading. Okay. Now, the 3 keys to mastering risk. Okay. One must think in terms of percentages and no longer in dollars. Okay. One of my biggest pet peeves when I get on a call, and matter of fact, over the last couple of days, on the Twitter space, people talk about, oh, I made X amount of dollars. I made X amount of dollars, right? And when we post about making X amount of dollars, in all actuality, that's just a marketing tactic, right? When we're trading, when we're executing, I'm not thinking about dollars. I'm thinking about percentages. Okay. I'm looking at percentages, not dollars. So if I take the number 7 and I put a $sign in front of it, right? And I write the number 7 again and I put a percentage sign behind it, I automatically take on what? A different perspective on how I do what? Approach it. Okay. The number 7 with the $sign in front of it compared to the number 7 with a percentage sign behind it means and speaks 2 different things. Okay. If you want to be a consistently profitable trader, right, we have to scratch out the $signs and replace it with the percentage sign. Okay. We have to scratch out the $sign and do what? Replace it with the percentage sign. Okay. Because dollars is a byproduct of trading based on percentages. Winning a game of probabilities is a byproduct of what? Percentages. Okay. So we're no longer thinking in dollars. From here forward, we must do what? Think in percentages. Okay. Number 2, your risk to reward must always be weighted where your risk is just a fraction of the reward. Okay. Your risk to reward must always be weighted where your risk is just a fraction of the reward. Okay. So if I'm risking $1, I'm looking to make $5. Okay. If I'm risking $1, I'm looking to make $7. Key number 3, always know how much you should risk per trade first. I don't care if your setup shows up. I don't care if you can identify manipulation in the market. I don't care if you're thinking like the banks, if you can see the banks in the market. How much you should risk per trade needs to be defined first. So if I have a $10,000 account, right, and I only want to risk 2% per trade, I know before I enter the trade, my maximum risk is what? 2% or what? $200, which equates to $200. Okay. Again, the moment I start thinking about percentages, my anxiety eases up, right? Because I'm not thinking about losing money. I'm thinking about what? Risk and probabilities. Okay. If you had $100 in your pocket and $2 fell out, you're not going to stop the rest of your day because $2 fell out of your pocket when you had $100 in there. Right? But if you had $2 fall out of your pocket, what is it going to make you do? It's going to make you do what? Make sure that what? Your pocket is secure, right? Make sure that your next move, right, that your capital or your money is preserved, right? You're not gonna let it ruin your day. You're not gonna let it ruin your mood, right? You're gonna move on to the very next thing. So again, the 3 keys to mastering risk. One must think in terms of percentages, no longer in dollars. Your risk to reward must always be weighted where your risk is just a fraction of the reward. And always know how much you should risk per trade first. Okay. I can't stress number 3 enough. Always know how much you should risk per trade first. I don't care if a signal comes up. I don't care if you see me trading live, during a live trading room. You have to know and define how much you are risking per trade first. Your exit must be established before you enter. Okay. Knowing your exit is the only way you can properly and consistently establish risk. Okay. Back to my previous example, right? If I was risking 2%, okay, if I was risking 2% per trade, I need to make sure what my risk is what? Just a fraction of the reward. Okay. So if I'm risking 2% per trade, I need to know that my reward or my target is 6% or 8% or 10%. Okay. I cannot properly define my risk without knowing where my exit is. You wouldn't take a road trip without knowing which exit to get off of. Okay. If you were traveling from Atlanta to Columbia, South Carolina, you wouldn't just get in the car without knowing where am I getting off the road? Where does this trip end? Your exit is what makes money available to you. You must always know where you are looking to get off the train before you catch a ride. Money is always made at the exit and never the entry. Okay. I'm gonna say that last part again. Money is always made at the exit and never the entry. Okay. So guess what? You can have a great entry into the market. Okay. You can have a great entry in the market. You can have a sniper entry in the market, but guess what? There's no money being made until you exit the market. Money is made at the exit, never at the entry. Okay. So again, this is about reshaping your perspective, your mindset. We talk about mindset and psychology. Part of shifting your mindset requires you to do what? Shift your perspective on something, right? In order for me to shift my mindset, I have to shift my perspective on something, right? So I can't shift my mindset without thinking about something differently. Okay. Again, a lot of you who on here live, a lot of you who's going to come across this video has had prior experience trading, right? And 9 times out of 10, it hasn't worked for you. You haven't consistently been profitable, right? You're probably not even a break-even trader, right? Well, guess what? If I want to do something differently, I have to do what? Take on a different perspective. I have to look at it differently. Okay. Now, think about it this way. If I want to make money in the market, and I now understand that money is always made at the exit and never at the entry, what should my focus be on? What should my focus be on? My focus should be on where am I likely to get out of the market? Where is my target? Where is the liquidity? Where is the retail trader's money in which I'm seeking to take? Okay. My focus isn't necessarily about where I enter the market. Okay. We're going to dive into entry, right? But if I want to get paid, I need to know where is the market likely to pay me? Okay. Where is the market likely to pay me? Guess what? The only place the market can pay you is at your exit. Okay. So you can learn a strategy. You can get signals. You can get indicators. You can be privy to the top trader setups, right? But if you don't know how to exit the market, if you don't know how to leave the market, guess what? You can never learn how to get paid. So if you want to learn how to get paid, if you want to turn this into a 6-7 figure opportunity, your time, your focus, and your energy needs to be focused on where I want to learn how to leave the market. I want to know how to say, or when to say enough is enough, right? Most traders fail because what? They hang on to losers too long and they don't hold on to winning trades long enough, okay? They hang on to losing trades too long and they don't hold on to winning trades long enough, okay? Money is always made at the exit, never at the entry, okay? And when we start talking about risk management, money is also lost where? At the exit, okay? Money is also lost at the exit, okay? So I want to keep my losses small. And I'm gonna do an entire series entitled How to Lose, right? Reshaping your perspective on taking an L, okay? Now, the only time you can be wrong in a game of probabilities is when you do not play according to your plan. The outcomes are outside of your control every single time, okay? The only time you can be wrong in a game of probabilities is when you do not play according to your plan. The outcomes are outside of your control every single time, okay? Like the title says up here, trading is not about right or wrong. Those things are relative to perspective, okay? Because guess what? The same time I'm selling in the market, somebody else is buying, okay? Same time I'm selling in the market, somebody else is buying. One of us is going to lose. So what's right for me was wrong for the next man, right? What was wrong for the next man was right for me, okay? So understand this, we're playing a game of probabilities, and the only way that we can be wrong playing a game of probabilities is if we do not play the game according to our plan, according to your plan, okay? And it's a game, why is it a game of probabilities? Okay, it's a game of probabilities because what? The outcome is outside of your control every single time. Okay, it's outside of your control every single time. Well, how do you win a game of probabilities? It's simple. Consistent wager or bet size, I only execute when my edge appears in the market and I have a favorable risk to reward ratio, okay? Consistent wager or bet size, meaning that what? I'm calculating my risk in percentages according to what? The size of my bankroll, okay? I'm calculating my risk based on the size of my bankroll. Number two, I only execute when my edge appears in the market. This is key. This is important. I only execute when my edge appears in the market. Okay. And what do I mean by an edge? An edge equals an advantage. Okay. An edge equals when what? The odds are stacked in your favor. Okay. There are times in the market, the banks and the institutions, through manipulation, they leave trails, they leave clues to let us know when the probabilities or the odds are stacked in our favor, okay? We only execute when our edge appears in the market, okay? We only execute when our edge appears in the market. And last but not least, I want to have a favorable risk to reward ratio. Okay, favorable risk to reward ratio. Again, if I'm risking 1%, I look to make what? 4% or 5% or 10%, right? Or 20%. Okay, I want to have a favorable risk to reward ratio. So when I execute when my edge appears, right? And I put my money on the line, I know what? I have an advantage. I know the probabilities are stacked in my favor, right? And in the event that the market works out in my favor, I know I stand to make more than I lose, okay? I know I stand to make more than I lose, okay? I'd rather be accurate than right, okay? This is something that you really must take to heart, right? And again, all of us have to unlearn it, because all of us went to grade school. All of us went to school 12, 13 years or longer, right? Trading proves to be difficult for what? The most quote unquote educated folks, okay? Why is trading so difficult for quote unquote educated folks with master degrees and doctorate degrees and participants of higher learning? Well, guess what? We've been indoctrinated that what? We had to be right, quote unquote right, 80, 90% of the time in order to prove ourselves what? Proficient or efficient in a subject matter. Okay? You need to make an 80, you need to make an A, you need to make a B, you need to make a C, right? This is how the public, this is how the masses, what? This is how we're educated, right? So majority of our life, we are taught pass, fail, okay? Pass, fail. And if things don't go in our favor, or if the outcome isn't as expected, we look at it as failure, okay? If the outcome, most of us think about it in this way. If the outcome doesn't come, if the outcome doesn't work out in our favor, we look at it and judge it and label it failure, right? Because again, we've been educated and indoctrinated that what? We have to be right majority of the time to be worthy, to be good enough, to prove ourselves sufficient and efficient in a subject matter, okay? Trading is a game where you can literally be right less than 50% of the time, okay? You can have less than a 50% winning ratio and still consistently make money in the market, okay? I know traders, guess what? I know some of my students who have a higher win percentage than I do, right? But they're not even break-even traders, okay? So what's the difference between someone who wins more trades, right, and can't even break even compared to someone who only wins 60% of his trades, okay? Again, this requires a lot of unlearning and relearning, okay? I'd rather be accurate than right. Right and wrong is simply a matter of perspective, okay? Look at this chart at the bottom, okay? It breaks down the risk to reward, the win rate, and the loss rate, okay? These are the percentages that you must win in order just to be break even, okay? Break even, no loss, okay? With a 1-to-4 risk to reward ratio, I only have to be right 20% of the time to not lose any money, okay? I only have to be right 20% of the time to not lose any money, okay? To put it in perspective, think about showing up to a math class and making a 20 on your test. Right? Well, guess what? In trading, we can make a 20 on our test and we can still make money. Okay? At the very least, we cannot lose money. If I had a 1-to-20 risk to reward ratio, I only have to be right 4.76% of the time to break even. Okay? I only got to be right 4.76% of the time to break even. So here, this chart shows you the power of risk to reward ratio. Okay, constantly revisiting this is key to shaping your perspective about what? Giving up your will of always wanting to be right. Okay, giving up your will of always wanting to be right. When it comes to relationships, when it comes to friendships, right? Companionships, most of us, we naturally struggle and have a hard time maintaining these relationships. Why? Because one or both of us have a hard time giving up our will to be right. Okay. Guess what? If you want to be a consistently profitable trader, if you want to be a 6-figure trader, if you want to be a 7-figure trader, giving up your will to be right is absolutely mandatory. Okay. Absolutely mandatory. Okay. Think about it. Baseball players bat 300. Okay. That means they only hit the ball. They only get a hit 30% of the time. Okay. Batting 300, hitting the ball 30% of the time, get you 300 million. Okay. When it comes to risk management, right? I like to use the baseball analogies. It's base hit after base hit after base hit after base hit. And guess what? Eventually that home run is going to come. You don't know when it's going to come, right? But I'm focused on what? Being consistent. I'm focused on what? Getting on base. Okay. I'd rather be accurate than to be right. Okay. And that concludes class number 2 on how the markets really work. Make sure you follow the 722 YouTube. Make sure you're following us on Twitter at 722p. Myself on Twitter at Chris Cole I am. I put my option plays, my trading plays, active live there Monday through Friday. Make sure y'all tap into the NFT project at 722.io. We'll be back tomorrow to go over charting and candlestick basics. Okay, so this is going to be a tomorrow's class is going to be a refresher for those who already have some experience trading, and it's going to be a brand new breakdown for those of you who are new to trading. Okay, I'm literally going to give you everything you need from A to Z. Literally give you everything that you need from A to Z to be successful in the market. I appreciate you all for showing up. Make sure y'all like, subscribe, and share the video. All right, peace, love, and blessings. I'm out.
Thank you, bro. Thank you. What a great class tonight. If you guys enjoyed this class and you got some nuggets, some education, some information from this class, give me a 1 in the chat on YouTube. Let me see how many people felt like they got some knowledge out of this, a good education out of this class tonight. This was class 2 of the 722 project. And I hope you guys definitely felt like it was of value to you guys as well. If you felt like it was valuable to you, go ahead and hit the subscribe button, hit the like button to make sure you go back, because every time we go back and listen to these, we get new nuggets, a wealth of information, a new aha moment, right? So we absolutely love you guys for joining our community. I appreciate you guys rocking with us. I hope you got some nuggets of information that you can use, not just in trading, but in life as well. Thank you, Dr. Chris Cole, for all that you do for our community. And you guys, we will see you tomorrow night on our Twitter space. Also follow us on Instagram, because we did go live today there. Matter of fact, just write down, go to 722 SEVEN22.io, sign up for the wait list. Okay, so you can tap into everything. Discord, Dr. Chris Cole put his plays into the Discord, and you can tap in with us and tap in with the project. All right, we love you guys. Peace, blessings. We will see you tomorrow. Peace.